Hey, it's Dinko the Realtor, and once the Great Correction is over, how much are home prices going to fall? How many years back are we going to go? And I'm going to share that with you of where we potentially could fall. Now, if we take a look at this article here, we see that the artificial inflation in home prices, house bubble 1 in 0809, and then here's house bubble 2, artificial home inflation because of low inventory, low interest rates. So different parameters, and we'll get into that a little bit as well. But as we see here, once it declined, it was pretty rapid, and I think that's where we're headed now. The news is a little bit behind, like they always are. So Moody's has finally now downgraded 210 housing markets, and they're saying that there could be a 20 to 25% home price drop in values if we enter a recession, and 10 to 15 if we don't. Well, I don't know when the definition of a recession changed, because in my econ classes, it's always been once you have 2 consecutive negative terms of GDP, you're in a recession. We have that. So I don't know when it changed, what the definition is now, but we're definitely in a recession. And again, they're always a couple of months late. So they'll probably tell us in a couple of months that we're in a recession, even though we are. And, which again takes me back to that chart of, how far down are we going to go? And this chart is going to be an indicator. There's actually 10 different charts here that we're going to go through that's going to show us where we potentially could fall. Now, the other thing to keep in mind is new construction. Well, new construction was actually at an all-time high at the beginning of 2022, where 1/3 of the housing market was new construction. And the the fastest pace for new construction hit what it was in 2006, right prior to the 08-09 crash, which really kind of started in 07. So this other article now shows us that the new construction starts in February of 2022 surge, and they surged 22% from a year ago. So the new construction starts in February 2022 were 22% higher than they were in 2021. And they were 7% higher, 6.8 from January of 2021. So January was higher, February was higher. I believe March was also higher. And all the news, all the outlets, the Fed was saying we're going to do a soft landing. Everybody thought that they could capitalize on 2022. They overly invested from tech, builders, retail, and now they're all kind of suffering the consequences. So definitely keep that in mind as all of these new construction houses are going to hit the market at the arguably the worst time, the holiday season, and at the beginning of the year when we now start having existing homes. People are looking to downsize, upsize, relocate, start putting their houses on the market because the school year is coming to an end. And all of that's going to further flood the market, because we saw that happening during that frenzy here. Once January, February, March were the crazy months, but March started seeing increase in inventory, and it was increasing every single month from March. That was during the purchasing and selling season, right? So all of a sudden, inventory is going up. Now, the thing is we kind of created 2 bubbles during this pandemic, and it's a little scary. And a lot of this is not in the news. So when they're comparing data right now, August, September, and when they compare October next month, they're actually comparing it to a slowdown in 2021. So here's an article here. And this article will kind of show, so home price growth in the US shows signs of slowing down. So this was in October of 2021. And again, a couple of months late, because we felt the slowdown in August and September. September, definitely. I mean, I remember just how the market it was like you were on the highway going 80 miles an hour, and then all of a sudden you were braking to 35, 40. I mean, it just started slowing down. Inventory started building up. And if we take a look here at this article, the National Association of Realtors said that the median home price in September hit $352, and it was up 13% from the prior year. However, it was slightly down from the previous month, and it was the 3rd straight month of declines. So the interest rates were still low. The Fed didn't start raising their rate, and the interest rates were still in the low 3s. And we started seeing a slowdown in some markets. I mean, by the time December came around, there was houses that were sitting on the market 100+ days in certain markets. So once January and February came around, all of those houses were gone and everything started getting multiple offers. So we had an artificial inflation in 2021, and then we had a slowdown in 2021, and then an artificial inflation in 2022. Now, let's go back over here to the charts and take a look at this. So if we take a look at San Francisco, once it bottomed out, if you take a look, prices went back about maybe a little bit more, but about 3 to 4 years. Now, if we look once the peak hits here in Seattle, right? Peak hits right there in 2008, they were bottoming out for, it seems like, a longer time than San Francisco. Same thing, once you go back, it's about 3 years. Let's take, well, here's San Diego's bottoms out and then goes back up layers. So let's try to get out of California here. Denver is a good one to take a look at because Denver in the early 2000s wasn't the city that it is today. It wasn't being flooded with new residents. Now it's one of those go-to cities. So once they bottomed out, but we still see they went back to the early 2000s. And so all of this is indicating that if we are in a bubble, which we are, I mean, the Great Correction has started and it's finally in the news. I mean, 25% of home value loss, that's definitely a bubble. And the fact that it's in the news, it's been happening for a couple of months. Now that it's in the news, people see it. So we have the correction that's going on. Now we have the buyers and the sellers that are seeing it in the news. So now that creates fear. So that's going to cause prices to drop down again, even further. And now we're going into a recession. Well, we're in it, but now they're going to announce that we're in a recession. We're seeing layoffs. We're seeing hiring freezes. So once that hits, then we're going to see prices go down even further. And if the global recession happens, because in 08, 09, the US housing bubble caused a global recession. Well, right now, all of the supply chain issues and everything that's going on, we are in a global recession pretty much. So if that hits, that's going to further devalue houses. So we have multiple things that are going to be devaluing houses, and it's going to be in phases. And we saw in these charts here, once things start plummeting, they plummet quickly. And I want to go to Phoenix over here because Phoenix is one to keep an eye out on. They just skyrocketed and then they plummeted. And that's kind of what is going on right now in the housing markets. Is we just saw this, and it was, I mean, if you look at it here and here, it's much steeper for a longer period of time, which is not a good thing. And they bottomed out. Once they bottomed out, their prices went back to the early 2000s. I mean, look at this. And let's take a look at Las Vegas. It was another one where prices just kind of skyrocketed for no reason. It wasn't one of those economies that should see that. And all of a sudden it plummeted down as well, and also goes back to the early 2000s. Now, let's take a look at these articles and kind of compare apples to apples, oranges to oranges per se. So here we had subprime lending, right? And over here we have stricter laws. So that favors the new bubble. And over here we had more inventory than we have over here. So again, that favors the new bubble. However, the steepness here was much higher than it is here. The Fed is also talking about keeping interest rates higher for a longer period of time because they want to learn from their previous mistakes so that the economy doesn't just rebound too quickly. We have stagnation, we have all these other issues. And the other thing is when the refinances happened over here, they actually happened at a higher percentage than over here, meaning more people took out equity out of their house during the pandemic refinance boom than they did prior to that 08-09 crash. So if we see prices going back to 2018, 2019, because we see that prices are going back about 3 to 4 years. So if the correction is starting here in 2022, are prices going to end up in 2019, 2018? What if they end up in 2016, 2015? All these people that took this money out are now underwater. So that's definitely something to keep in mind. And all of that new construction stuff that's hitting the market at the worst time, and all of this fear and all of this global recession, right? So here, the US caused the global recession. Right now, we have a recession that's going on in the entire world. So that now favors the previous bubble. So if we take a look at it, there's stuff that favors the previous bubble, there's stuff that favors the current bubble. So it's definitely going to be interesting what's going to happen. I really hope we avoid this and home prices fall down to just pre-pandemic levels, maybe somewhere right in that 2020 price range, because it's going to be awful if they fall further than that. And I think there's a good chance that they could, just because of what's going on right now. So stay tuned. I hope you liked the video. Give me a thumbs up, leave a comment, subscribe to the channel, and have a great rest of your day.